Hi everyone, I am Suhas Mohan, your tax mentor at BeingACCA, and in this video, we will be discussing the third question and the final question of the June 2025 pre-mock. So let's quickly jump into the question. The following information relating to the statement of profit or loss for the year ended 31st March 2025 for Flightpath Trading Limited. So it is a corporation, it is a company, so which is incorporated. So we'll be discussing corporation tax in this question. And as follows, the gross profit is 367,116. The administrative expenses are 529,910, and the loss comes up to 162,794. The property business income is 4320. The profit from sale of shares is 1240. Interest payable on the bank overdraft is 2,200, and the QCDs come up to 1,048 pounds. Okay. The note one of the administrative expenses, these are the administrative expenses that is given, that is depreciation, entertaining UK clients, health and safety fine, cost of purchasing mobile partitions for use in the office, annual staff party, and other costs. So administrative expenses, the total which is shown as 529,110, 529,910, it includes all of these costs. So from these we can clearly identify that depreciation is a non-cash expenditure which has been included in calculating the losses, but which is not disallowed under taxation. So this should be highlighted. Next is entertaining UK clients. As we all know, entertainment is allowable cost for entertainment is only if it is provided to the staff and not to the client. So even that way, this is also disallowed. Next is health and safety fine. Health and safety fine is a type of fine and penalty, and in corporation tax, penalties that are relating to parking fines that are incurred by employees on the business is an only allowable expenditure. Other than that, any fines or penalties are always disallowed expenditure. So that means this should also be added back. Next, cost of purchasing movable partition for the use in office. So mobile partition is something that comes on that is a part of plant and equipment PPE or plant and equipment that is used in our in our computation of capital allowances. And but here what has happened, it has been shown as a revenue expenditure by adding it to the administrative expenses. But this is not how it should be used. Instead, the cost of mobile partitions should be used in the computation of capital allowances. So we'll be highlighting this as well. Next is annual staff party. All 32 staff have attended, and the cost is 10,100. As I've mentioned earlier, the staff, any cost of entertaining staff is an allowable expenditure. So this will be highlighting it, but just to identify, or we'll have a strike through on that. So for easier remembering, when you look at it, you'll be able to identify that it is a it is an allowable expenditure. Next, other costs, it has been clearly mentioned that all of the costs are allowable. So this can also be strike through. All right. Now the total of this comes up to 529,910, which is equal to what has been mentioned here. Moving to the next part of it, the sale of shares. The chargeable gain on the disposal of shares is 1240, the same as the profit from sale of shares. There is no indexation allowance. That means the chargeable gain that arises from the disposal of shares is 1,240 pounds, which will be intact or as is. So that is something we have highlighted. Next, on additional information, on 1st April 2024, the tax written down value of the plant and machinery pool was 152,800. So since it has been mentioned clearly as 152,800, this is relating to the capital allowances. And when they say the written down value of the plant and machinery pool was 152,000, it relates to main pool. All right, this is main pool. Next, on 9th August 2024, Flightpath replaced two delivery vans, paying 34,200 pounds for the new delivery vans after receiving a trade-in value of 2,600 for the two old vans. So that means this is not the actual cost, but the actual cost would be, and for capital allowances, always remember when you're taking the cost of vans or any asset, it should be taken at their original cost. And if it is taken using any replacement or any of those, that replacement should be separately shown as disposals. So actual cost of vans is equal to 34,200, 34,200 plus 2,600, which will be equal to 36,800. All right, make this note so that you'll be remembering all of those during the examination. Okay. On 1st November 2024, a new car was purchased for 26,100 pounds. The car had CO2 emissions of 15 grams per kilometer. Since it says it is 15 grams per kilometer, which means the car is under the 50-gram threshold, and so it will be categorized under main pool. And here it says the car is used by the managing director for Flightpath, and 30% of the mileage is for private journeys. When we are considering corporation tax, the private usage is negligible. We will not be considering that, because all this private usage will be part of the taxable benefits from the employees. So because of that, the any private usage will be ignored, and 100% will be considered as for the business usage only. All right, next, Flightpath's trading results for its previous 2 years are as follows. So the year ended 30th September 2023 is this much. Trading profits are 52,230. The property business income is 3,100. Chargeable gains were 1,222, and the QCDs of 800 were made. But but in the 6 month period ended 31st March 2024, what happened is they have changed their accounting period from 30th September to 31st March. Because of that, it has been considered only for 6 months. And after this, you can see from 2025, it is again being considered for 12 months. That is from 31st March 2024 to 31st March 2025. So because of that, what will happen? This period will be only for 6 months, and the other 6 months will be of this part. And because of this, capital allowances will also be prorated accordingly for the 31st March 2024. But here you can see the trading profits are 16,000. The property business income is 1422. There are no chargeable gains and no QCDs in this period. Now we'll move on to the question. First question, let's mark it A. The question says, calculate the tax adjusted trading loss for Flightpath Trading Limited for the year ended 31st March 2025. Okay. And here they have given in the notes that your computation should commence with the operating loss figure of 162,794 and indicate by use of zero any items which do not require adjustment. So here they are asking us to calculate the tax adjusted trading loss by from where, starting from this figure and not this figure. So since you're starting it from this figure, we know we'll be starting from that as, so first we'll write it down. Tax adjusted trading loss of Flightpath Trading Limited for the year ended 31st March 2025. Okay. So first, what will be having operating loss. How much is our operating loss? Our operating loss is 162,794. Okay. Now, what do we add back? We add back anything that is relating to the administrative expenses, as we have discussed earlier. Add back depreciation. We have already seen depreciation. It should be added back, and the depreciation is 5,600 because it is a non-cash expenditure. Next is entertaining UK clients. Entertaining UK clients. UK clients is 275 pounds. Okay, entertaining UK. Let me just cut it and bring it here for better reference. Okay, UK clients. Next is health and safety fine. Health and safety fine. The only allowable fines are relating to the parking tickets by employees when they go out for business purposes. Other than that, any fines and penalties are always disallowed. So 960 should be added back. Once you've added it back, what is that? The cost of purchasing cost of movable partitions. Always remember, movable partitions will be a part of planted machinery. This will be clearly mentioned to you in your whatever study text and all that you use as well. But movable partition should always be considered as a part of planted machinery. So cost of movable partitions is 250 pounds, 10,250 pounds that has been added back. Now they said indicate by use of zero any items which do not require adjustment. So because of that, we have something known as annual staff party. Annual staff party is an allowable expenditure, so it should be annual staff party would be zero. Okay, and the other costs are all allowable. So that is also not required, which do not require adjustment since they have told that other costs, it can be shown as zero. All right, with this, we have covered everything that relating to the administrative and administrative expenses. But after that, when we come here, we can see property business income. Property business income, when computing the taxable total profit, should be shown as a separate line item. But since you are only calculating the tax adjusted trading loss, this is not relevant for our computation. So you can ignore that. Next is profit from sale of shares. Again, profits from sale of shares is related to chargeable gains, which is also a separate line item in the computation of taxable trading taxable trading profits, so that also can be ignored. But next we have something known as interest payable on bank overdraft. Interest payable on bank overdraft is relating to the computation of the taxable trading losses. So because of that reason, this should be deducted. Less interest payable on bank overdraft, that will be minus 2200. So after this, what do we have? Qualifying charitable donations. Again, qualifying charitable donations should be deducted from the total taxable profits and not from the tax adjusted trading profits. So because of that, that will also not be considered for us. Next, we will move on to the next part of it. That is our capital allowances. Less capital allowances. And I would always, like I've told in the earlier video as well, I would always encourage share capital allowances as a separate working. So you can have your workings over here. Working one, capital allowances. So you first you'll have your main pool and your allowances here. But before main pool, we'll have to leave a row where we'll be deducting all the, AIAs and FIAs if anything are applicable. So for this purpose, let's start off with the balance brought forward. We have some balance that has been brought forward from the previous years. It has been mentioned. It is 152,800 pounds. So it says it is a part of plant and machinery pool. So it will be coming here 152,800, your main pool. Next, you know, all purchases that are eligible for AIA. So here we can see all purchases that are eligible for AIA. The first would be delivery vans. Delivery vans, which will come up to delivery vans will be, as I mentioned earlier, delivery vans, you should always take it as total value, that is 34,200 plus 2,600. So that will be coming up to the amount that I have already mentioned. It is 36,800. Okay, so that amount you'll be mentioning it over here, 36,800. And next, along with delivery vans, we also have something that we have, not taken deduct, added it back because that is a part of plant and machinery. That is your movable partitions. Movable partitions is a part of plant and machinery, so it will be eligible for AIA. Movable partitions. How much is movable partitions? It is for 10,250. Now, total would be is equal to sum both of these. Total eligible for, write it down as total eligible for AIA less AIA would be minus this amount equal to minus Guys, always show it as referencing like this, because if you do it this way, it will really help you in not making clerical errors. So because you have your allowance of 47,050, that should be taken over here to the allowances column. Okay, it will be this amount. At 4750, you have got it. Next, we'll move on to the next purchases. The next purchase that we have made is a new car, which has a cost of 26,100 and the CO2 emissions are 15 grams per kilometer. Since the CO2 emissions are less than 50 grams, it will be a part of main pool and not special rate pool. So car, new car with CO2 emissions of 15 grams per kilometer. It will be part of your main pool, that is over here. It will be 26,100. And during the year, as I've already told you earlier, we have something that is known as disposals, because earlier two old vans have been disposed for 2,600. So that, and since vans also become part of main pool, if they exceed their cost, which usually does not happen, they should be disposed from our main pool. Less disposals, disposal of two vans, which will be shown as this minus 2,600. Now you get your total is equal to sum of all of these from main pool to this amount will give you your total sum. And from this, we will be deducting less WDA. And how much is the rate for WDA? You need not have to remember it, because you will be having it provided in your tax tables. If you go to your tax tables here, you can always see that the capital allowances for main pool is 18% and for special rate pool is 6%. So here it is main, ours is main pool, so it will be at 18%. Always remember, guys, as I've told in the earlier videos as well, never try to remember any rates or values that will be provided to you in the examination. You just have to remember the application part of it. So here what do we do is equal to minus this into 18% will give us 31,734, which should be also taken in the allowances column, is equal to this. And now after doing this comes our balance carried forward. It will be this plus this. Okay, before I do that, I'll also add another row where I can, show about the total allowances as well. I can just allowances is is equal to sum of both of these. And that would be equal to 78,784. Okay, and this amount, what I'll do is I'll paste it here. Balance carried forward would be is equal to this plus this. And with this, you get your capital allowances of 78,784. So that is something that you should show here is equal to 78,784. Always do it this way. So you're referencing, your answers will be right for the most of the part. So with this, we have covered everything. So now we'll come to total tax adjusted trading losses is equal to sum of all of these that have been mentioned here. Let me make a small correction there. It is operating loss. So I'll just change that to minus. Okay. So with this, you get your total loss as 226,693. And with this, we have come to the end of this question. Now let me show you the marking scheme for this. Your marking scheme, for every disallowed expenditure that you add back, you get a zero point 0.5. You get zero point 0.5 for depreciation. You get safety, health and safety fine 0.5. Cost of movable partitions, you get zero point 0.5. And for your annual staff party, which has been disallowed, you will be getting marks for adding back, adding zeros as well. So you'll be getting your total marks for these. And next, the remaining part of it, you'll be getting for interest payable. If you take it, you'll be getting that marks as well. And this brings up your total to 3 marks. And the other 4 marks will be for your capital allowances only. So always remember, capital allowances will be a major chunk of your marks when something like this is given. All right. So with this, we complete our total of 7 marks, the question. So we can move on to the next part of the question. In this, it has been given as assuming that Flightpath Trading Limited claims reliefs for its trading losses as early as possible, calculate the company's taxable total profits for the year ended 30th September 2023 for the 6 months period 31st March 2024 and the year ended 31st March 2025. So, guys, it has been mentioned that Flightpath Limited wants to claim its trading losses as early as possible. That means the trading losses it wants as early as possible. That means first it has to set off its against its current year, then it can carry back for a period of 12 months. When setting off trading losses as early as possible, the losses should be first set off against taxable total profits of the current year and then can be carried back for a period of 12 months. This is a most important point that you should remember, that it can be carried back not for one accounting period, one period of account, it is for 12 months. Okay, so here we can see the property income, there is no change, it is 4,320 here. Chargeable gains is 1240. These are the inputs that we should make, and the 6 months period they have already given it to us. So now what will happen? These losses have to be set off. Always remember, these losses have the trading losses that arise should always be set off before your QCDs. That is your qualifying charitable donations. So profits from sale chargeable gains is also 1,240 because that's exactly what they've mentioned, and there is no indexation allowance available. Now your total profits would be is equal to sum all of these and sum of all of these. So now we have identified what our total profits are and how much should we set off. So remember, this is a full 1 year. So we'll be setting off loss against the current year and carry it back for a period of 12 months. But here you can see these accounts are only prepared for 6 months period. That means this losses will be covered, but the other 6 months fall in the year ended 30th September 2023. So the losses can be set off for 6 months. The 6 month losses can also be set off from the total profits of the year ended 30th September 2023. Losses have been given, chargeable gains, everything has been given. And here you can see qualifying charitable donations. I did not take them because they should be taken after your loss reliefs. So from here, let's quickly write less loss relief. Our total losses, as we can see, is 226,693. Write that in your scratch pad. Total losses that we can set off are 226,693. If we move to the next question, our first will set off loss relief. Losses should be set off in full. So loss relief you'll be getting as they want to, claim the loss relief as early as possible. So minus 5560, or you can simply write minus of this equal to minus 5560. That will be 5560 has been set off. And next, how much after this, since we have deducted minus 5560, we will be left with 6693 minus 5560 will give us 221,133. Will give us 221,133. That is a maximum loss that we can set off. But if we go back to this 6 month period ended, since it is only 6 months, we can set off loss in full. That is minus 17,422. You have set off your losses in full. And next, if you come to this part of it, since only it can be, we have set off against 6 months, but we can only set off further 6 months 6 month losses only. So that will be is equal to minus this into 6 by 12. This will be a trading loss that you can set off against your, year ended 30th September 2023. From this, we will be deducting any QCDs if available. Less QCDs. As you can see here, there's a QCD of 800 pounds and that can be deductible. So minus 800 because our profits are still remaining minus 800. And here there are no QCDs anyway, so it will be 0 here. But in the current year, we have made a QCDs of 1048. But QCD, since there is no profits against which the QCDs can be relieved, here as well it will be 0. 0. Now your taxable total profits is where we get taxable total profits would be is equal to sum of this to this. Will be 27,476 will be a taxable total profits. In this it will be 0, but just to show it as a calculation, it is always better to show it like this and you're good to go. And you can also extend this profit, you will get the formula here as well. So it will also be 0. And with this you'll be scoring your 5 marks. So here it will primarily be 1 mark for this, 1 mark for this, and 3 marks for your year ended 30th September. Because you have to calculate your loss relief into 6 by 12, you'll be getting your 1 mark there. And your QCDs, you should know that QCDs, you will be getting zero point 0.5, zero point 0.5 for that, and your total calculation of 1.5. And here for showing this QCDs as 0, you will be getting another zero point 0.5. So I will change this to 2.5 and you'll be getting 1.5 for this, 1 for this and 2.5 in this calculation. And with this, you will be getting a total of 5 marks. Now with this, we'll move on to the last part of the question. That is discuss all possible options for offsetting the trading loss available in Flightpath Trading Limited and the potential advantage of a claim relief for a loss against later period. Okay. So first, what they're asking us, what are the possible ways you can options for, you can copy this part of the question are, and you can show them in this, you can show them in bulleted points. First is set off against current year total profits, total profits. That is the first. Next, set off against current year total profits and then carry it back for the previous 12 months, previous 12 months total profits. Always remember, because they are asking about what are available to Trading Limited, and it has nowhere been mentioned that Trading Limited is a new company, so it can only be carried back for a period of 12 months. And the other thing that you should remember is when you want to carry it back, first you should be setting it off against current year, and only then you can carry it back. And third option is carry forward the trading losses. Okay, if you have done this current year and then carried it back for previous 12 months, you can also tell, and any unrelieved losses can be carried forward. You can also mention this point. These are the 3 pointers that they're asking you for. Set off against current year profits, next is set off against current year, then carried back for previous 12 months. And if any unrelieved, they can be carried forward. Third option is carry forward the trading losses. Okay, these are the 3 things that they're telling. Now, what is the next part of the question? What is the potential advantage of a loss relief against a later period? So the advantage of claiming loss relief at a later period is that you can determine is that Flightpath Trading Limited can determine how much of the loss that it wants to set off, how much of the loss that it wants to set off, so that the QCDs do not go wasted. As we have seen earlier, we have seen that the company has made a QCDs of £1,048 because it has set off the losses against the current year total profits. It will not be able to set it off. But if you carry forward, you can determine how much of the loss that you want to set forward. And based on that, you can show you can claim that much amount of loss for that period and the other can be carried forward. So this is an advantage. So for writing all of these options, you get 2 marks, and for the other option over here, this answer you'll be getting 1 mark. With this, you'll be scoring a total of 3 marks. And with this, we come to an end of our 3 questions. And guys, if you have any questions or any doubts, feel free to ping in the comments and we will be there to help you out at every point of your time. Always, okay? All the best, guys. Have a great day and prepare well for your examination because we are coming very close. We are left with the last 3 weeks. So prepare very well, guys. All the best. Bye, everyone.